Hello, trading is closed on June 21st, 2019. We'll go over our calls. Look for the pattern with the early low, which is what we got. We expected lower prices and got that too. We had an optional target of 29.4237. We came close in futures, but even if we had hit it there, I wouldn't have counted it because I only count things that happen in regular trading hours. We're just going to forget about this one because optional targets don't have the same level of accuracy as the regular MEJT targets. During the day, we got a sell signal and an ultimate sell signal, and as soon as we did, market staged a rally. MEJT said the rally was false and prices would fall back under this low, which they did. Nothing new from Monday. I have mixed indicators here. It'd be a lot easier to make Monday's call if we knew how we were going to open. Now, Monday's patterns, the one with the early low, intends to have a late high, even though it's not required. Usually it's a rally day with a high on the last hour of trading. If it is negative, it's usually because we drop in the first hour or two, drop sharply in the first hour or two. It's not good when you hit a new high and close negative. And it's not good when you drop into the close on Friday because usually such moves carry forward into Monday's open. What's positive here is you have a wall into the close, and very often that gaps up when you open Monday. And it's also, so this whole move is suspicious because it was option expiration Friday. SPY closed at exactly 294. Now, specialists are obligate sellers of options, and when they arrange things so that anyone who had a 294 option long or short wound up with no money, it smacks of manipulation. And if it is manipulation, we should gap up at least over this high and preferably over this one. If it's the real thing, we'll keep on dropping, and I think we'll know which one it is by Monday's open. If we do gap up, I think we have resistance around 29.86, 29.87. If you move down instead, not my favorite scenario, I can make a case for this high holding, even though it's not as good a case as having us go a bit higher first. Here's what I think's going on. You go back to early May. Here was your wall. Here was your hole in the wall gap. We traded just over that high. Resistance over the wall holds on the first challenge. When you challenge it again, very often the resistance fails, and it fails in grand style. That's pretty grand already. I would like it to be a bit grander, but can't say it's required. I do have Fibonacci and trend line resistance around 29.86. It's a more pleasing number to me, and if we do keep going up, that's where I'd look for resistance. The idea here is eventually this is going to retrace, both because the first move after the Fed announcement was down, and because of what I have as the wave count, with this being A, looking for an ABC. Now, if this is A of B, you can see there's a Fibonacci relationship to A of B and C of B right at today's high, but there's a more pleasing one if you go just a bit higher. When I did this before, it worked out to the same 29.86, 87. I could make it do it if I go here, I guess. Well, maybe it doesn't work. What can I tell you? Anyway, that's resistance in that area. I also have resistance in the 29.80s from this trend line. If we do stop here, not saying we will, but if we do, I can explain it. We have an 8x1 Gann fan line would make Mr. Gann happy. We have a 618-point rally that would make Mr. Fibonacci happy. But even though he's disappointed me many times, I'd rather make Mr. DeMark happy. Well, I changed this and then it changed itself back. Let's just fix it. I don't know why it does things like that. That's bar 10 of a sequential cell. Remember, unlike the combo cell, bar 13 doesn't have to be the highest bar. But if we went a bit higher, we would have bar 13 of a combo cell on the weekly chart, and we'd also be over this upper Bollinger Band. So if you're going to try to pick top, which is kind of a dangerous thing to do in this market, would be less risky, I think, if you waited for the 2980s. Okay, Monday's pattern has the early low, tendency to have a late high. If we move down smartly in the open, this has a chance of holding, even though it's not my favorite upside target. I can make it work. But I'd rather see, and we'll have to see if it happens, I'd rather see us call this move false, gap over it, have a standard rally day, and go into the 2980s probably sometime next week or the week after. The open's going to tell us a lot. If we go down or go up, I think it'll telegraph the next tradable move, and that's today's call.